Thank you, everybody. I will now call this meeting of the Finance and Corporate Services Committee meeting to order at 6:04 p.m. Tonight's meeting is being held in person in the council chambers with members of the committee and some members of executive management team and city clerk. And then we also have staff online via video conference if we need them. Chambers are closed to the public until further notice, and Councillor Alwyn, member of council, is also joining us virtually. So we have no open delegations on the agenda, but we do have two presentations. The first presentation is by Deloitte concerning the 2021 Audit Service Plan. I'd like to call up Mr. Craig Millar, Director of Finance Treasurer, to provide a brief introduction concerning the 2021 Audit Service Plan. Mr. Millar.
Through you, Chairman Morales, just let you know that Pina Kolavaki from our external auditors, Deloitte, will be presenting their audit plan for the 2021 fiscal year. They are required under the Canadian General Auditing Standards to provide to Finance and Corporate Services Committee a high-level overview of their responsibilities as external auditors. And with that, I'll turn it over to Pina.
Great, thank you and good evening. So I'm here, as Craig mentioned, to present my annual audit service plan. I understand the materials were included in your package, and what I'll do is do a screen share so that members of the committee will know what page I'm speaking to in the document. So here we are. Okay. So this document comes to the Finance and Corporate Services Committee in your role as the oversight body for financial reporting with respect to the corporation of the City of Barrie and its related entities. In scope from a financial statement audit perspective are the consolidated financial statements of the City of Barrie, as well as the standalone financial statements for the three entities that require standalone audits, and that is the Public Library Board, the Police Services Board, and the Downtown Business Improvement Area. From an audit perspective, Deloitte performs the audits of these related entities, and we also perform the audit of the consolidated financial statements that include, on a consolidated basis, the accounts of these entities. The scope of the audit work from an audit perspective remains unchanged from prior years, as there's been no changes during fiscal 2021 that impact financial reporting or auditing standards in Canada. I'll walk the committee through some of the key highlights of the Deloitte Audit Service Plan. So one is from a terms of engagement. The various audits that we do are covered by a master services agreement that is concurrent with a request for proposal that was done for audit services through a competitive process. And you will see here a reference to the various dates of when that process was done. With respect to the areas of audit risk, there are two areas that from an audit perspective we consider to be areas of significant audit risk, and that is because these two areas have a presumed area of fraud risk as it relates to financial reporting. These are requirements for audits in Canada. And as such, we continue to consider these areas of significant audit risk for the audit of the City of Barrie. Our document provides details for you around our assessment of the areas of risk and our audit procedures. And again, given the nature of the operations of the city and the fact that accounting and auditing standards remain unchanged, the audit approach in terms of the work done for these areas of audit risk remains unchanged year over year. With respect to audit materiality, as auditors, we use materiality to come up with a numeric benchmark to assess if the financial statements are materially misstated. That benchmark is based between 2.5% and 5% of expenses. We typically would use the lower end of that percentage range for the City of Barrie and the higher end for some of the smaller entities that we perform our audit work on. At the conclusion of our audit, we report back to this committee around the materiality we used in the audit process and any audit adjustments arising from the audit process. And again, we exercise professional judgment in determining our audit materiality benchmarks and as well in the assessment of errors during the audit process. Of course, any amounts greater than 5% of materiality would be communicated back to this entity for the consolidated City of Barrie. And then for each of the related entities, it would go to their board who approves their standalone financial statements. With respect to the risk of fraud as it relates to the financial statements, you'll see here the reproduction of the various steps that the auditor performs in assessing where the risk of fraud could exist in the financial statements, the various steps in the audit strategy. These are requirements for every audit in Canada. So these steps that you see here are not because there's a significant risk of the city of Barrie or something unique in your municipality. These are the normal steps that the auditor would do to assess the risk of fraud. For example, testing of journal entry and testing of accounting estimates. When we come back at the end of the audit process in the spring and reporting the audit results, we also would provide the results of these particular audit procedures that are done to address the risk of fraud. With respect to the work of specialists, we communicate to you that we intend to rely on a number of specialists that are engaged by the city in performing our audit procedures. You will see them here listed. They include the city's independent actuary with respect to the assessment of the liabilities and related expenses for post-employment benefits. We rely on the city's engineers and their other independent consultants with respect to the various liabilities that are recorded in the city's financial statements to account for landfill closure and post-closure costs. And of course, we rely on legal counsel with respect to the assessment of legal claims and the recognition of those amounts in these financial statements. In addition to that, Deloitte information technology specialists are used in the audit process to test design implementation of key general computer controls in the city. And those computer controls relate to both the ERP that's used for financial reporting and the overall IT systems that are used by the city that support the financial statement audit process. Again, the nature of specialists that we rely on from an audit process and our level of reliance remains unchanged from prior years. Our document also speaks to our next normal in terms of hybrid work. Our approach in working with our clients is one that is flexible, and flexible in terms of the type of audit work that we need to do, what pieces of audit work need to be done in person, what audit work can be done on a more flexible hybrid approach, and what could be done virtually. As the various pandemic restrictions change over time, we work with our clients to design an audit approach that one works to address the risks and as well really is flexible to the unique circumstances and the public health guidance at that time. With respect to doing audit work virtually, we have a number of tools that we've successfully utilized on your audit for a number of years and will continue to utilize to assist performing work virtually in an efficient manner. We summarize these tools for you on this slide. We've used these for now 2 years on the City of Barrie's audit and have had no issues with using these tools. We're prepared to do the entire audit virtually if required to do so, but also prepared to do work on site as appropriate and as available with respect to public health guidance. We'll continue to work with your treasurer around making those decisions at various points in time as we're working through the audit process. This page here, again, summarizes for you the areas of audit risk. We are required to communicate to you these risks and enumerate for you the audit approach. And as I indicated in my preliminary comments, there's been no change in our proposed audit approach. And as well, those who've been on this committee for a number of years would have remembered that at the end of the audit process, we report back on these areas and historically have not had any significant misstatements in these areas or any issues with respect to these areas of audit risk. Appendix number 1 meets the requirement to communicate to you our audit approach. In auditing a municipality of your size, we take a risk-based approach where we look at the risks in the organization as they relate to financial reporting and then customize our risk and audit procedures to address the various areas of risk. This appendix summarizes for you that approach that looks at both the testing of key internal controls as well as a substantive audit procedure in order to render our audit opinion on the financial statements of the City of Barrie. Appendix number 2 summarizes for you the various communication requirements. So these are the communication requirements that are required under Canadian auditing standards and that you typically would expect that an auditor communicates with those charged with governance. So these communication requirements come to the committee each year. At the end of the audit, we will come back to you and indicate to you where a communication requirement is applicable, how we've met that communication requirement. This list is a requirement under Canadian auditing standards. And again, there's been no changes in the various items that the auditor must communicate to you. And then finally, right at the back of the document summarizes for you the various Canadian public sector accounting standards. So as a reminder, public sector organizations in Canada, so federal, provincial, municipal government, and controlled organizations follow a body of accounting standards called Canadian Public Sector Accounting Standards. And as we've been communicating to you for a number of years, standard setters in the public sector have been busy working away at a number of projects to align financial reporting in the government and public sector to what is normal and customary in other sectors in Canada and internationally. What you see here on this page are the 3 sets of accounting standards that will be applicable for the 2023 and 2024 fiscal year ends for municipal governments in Ontario and as well all levels of government in Canada. The nature of these accounting standards, again, is designed to provide financial statements and financial information that is aligned to international financial reporting and as well a full accrual basis of accounting. So one of the items you will see here is the asset retirement obligations accounting standard, which requires full life cycle accounting for capital assets. And what that means is if there are end of life costs for capital assets, these are now going to be recorded and recognized in government financial statements at the point that the asset is acquired and then expensed over the life of the asset, because really those end of life costs provide a benefit as the asset is used as opposed to an expense at the end of life. There's also some new accounting standards which relates to revenue and how amounts are recognized based on performance. And then finally, financial instruments, where this accounting standard introduces the concept of fair value accounting in the public sector. Currently, the accounting framework used by governments in Canada, everything is on a cost basis. There's no fair value adjustments, and this financial instruments section really requires the reporting of financial instruments, including derivatives, on a fair value basis. Again, these 3 types of accounting standards are done by every other organization in Canada except for the government. So this is the last leg of the journey. And you'll see here that a couple of these effective dates were delayed because of COVID-19. So the standard setters have given all levels of government in Canada some time to work through implementation of these standards. Given the complexity and also given the amount of work that implementation of some of these standards would require, particularly those that relate to capital assets and inventorying assets and then recording some of these costs. So that, I guess, concludes my formal presentation. Through the chair, more than happy to address any questions or comments on the Deloitte Audit Service Plan.
Thank you very much for that presentation. Are there any questions from members of committee to Deloitte or our staff? Mayor Lehman, go ahead.
One, Mr. Chair, and thank you, Pina, for the presentation. It was actually on that very last of the new standards. If I'm interpreting the note right, it won't affect us for your audit of our 2021 fiscal year, but it might next year. Beginning on. So it looks like it's 2 years out. I guess the issue I wanted to ask you was, as the city has moved into a broader range of investments through our investment board and the activities of our finance department, does that mean that you have to establish a value for instruments that would have a variable value at the time? I mean, do you assess the risk, I guess, associated with the range of investments that are now in our portfolio?
Yeah, so through the chair, that's an excellent question. So yes, the financial instrument standard, the effective date is fiscal years beginning on or after April 1st, 2022. So for your organization, that'd be your 2023 year end. So what that means is where you have financial instruments, so either asset or liabilities that are financial in nature, there is a concept of fair valuing those balances. And recording any of those fair value adjustments through a new financial statement called the Statement of Remeasurement Gains and Losses. So what that means is in cases where you may have an asset that changes in value because of perhaps a market discount rate, those assets would be adjusted up or down on a fair value basis, and then that would be reported separately on a separate financial statement. So this is quite new for the government and quite new for all levels of government, as that reporting has never really been available to kind of show the changes in fair value at a point in time.
Yeah, that is new. I'm not sure how much it's going to particularly affect us, but it'll be interesting to see over the next couple of years. I guess it raised another question for me, which is, given the inflationary climate now, are you in the point in your audit cycle where you're going to be redoing the actuarial work on our future benefits? And do you expect a big change in the discount rate? Because that can have a big impact on our statements.
Yes, so through the chair, the evaluations are done once every 3 years. The good news is an increase in discount rates decreases the liability. Yeah. So it's from a financial reporting perspective, that is a net positive from a liability and expense perspective, and those will be done adjusted for on a maximum 3-year basis. And that would be for both the City of Barrie as well as its various consolidated entities that would potentially have, in some cases, standalone liabilities that they report in their financial statements.
Such as Barrie Police. Yeah. Okay. Thank you very much. Thanks, Mr. Chair.
Thank you, Mayor Lehman. Other members of committee have any questions or comments? Nope. Non-members of committee. Councillor Rima, go ahead.
Thank you, Mr. Chair. I guess this is a question for Mr. Millar, and it's also to do with Appendix 3. With the standards changing, does our accounting system need to change as well? How much impact does that have on how we do our work here in the city?
Through you, Chairman Morales. It's a great question. And I expect there will be some changes. We are fortunate in that we do have a bit more time. So the accounting group will be leading some projects next year to pull a lot of the information together and to help with the valuation processes. So there will be some change. At this point, I'm not really sure the significance of it. I think coming up with some of the methodology on how we value some of the post-retirement benefits will be the bigger challenge. And then we'll address the system changes. So there's more work for us for sure.
Perfect. Thank you, Councillor Rima. Any other non-members of committee questions or comments? I had a quick question, Ms. Kolovecchia. Inflation is happening. Obviously, inflation lags a little bit. It doesn't show up right away, at least in the books and in the effects. How did Deloitte account for the effects of inflation, if at all, they needed to, when assessing our, what was on one of your pages, obviously you had your materiality range and your margins, like how did that affect your analysis for this unique year? Or is that something that is going to show up more next year? And how does that affect us from an auditing perspective?
Yeah, that's a great question. So to the extent that we are seeing in inflation in the municipal environment, we are seeing it in terms of cost to complete capital projects. So perhaps the construction cost inflation has come out ahead of the other numeric benchmarks. As I indicated in my document, we typically would assess materiality based on consolidated expenses. And would look at that amount at year end. So to the extent that some of that inflationary pressure comes through this year's financial results in terms of expenses, it could have an impact on materiality, although we do tend to round our materiality amounts down. So I would indicate that it's my expectation our materiality would probably be fairly similar to prior years. We would not expect a material impact from a fiscal year perspective to cause a change in our audit scope at this point in time.
Okay, perfect. Thank you so much. And thank you to you, Deloitte, and your colleagues for this audit for that. So moving on to, and we can bump this up in the section right now. There's a recommendation that's required, and it's basically that the 2021 audit service plan presented by Deloitte to LLP to the Finance and Corporate Services Committee on November 16th, 2021 be approved. Could I have somebody put that on the floor as printed, as read? Councillor Harvey, seconded by Mayor Lehman. Any questions or comments on that? None? Seeing none, all those in favor, please indicate. Unanimous, none opposed. Perfect, that passes unanimously. And thank you, Ms. Kolovecchia, on the presentation. The second presentation is by Grace Marsh, Acting Manager of Revenue and Property Tax concerning the 2020 Audit Service Plan. I would like to now call upon Grace Marsh to provide the presentation.
I'll just maybe jump in there, Councillor Morales. I don't want to give Grace a heart attack because I think you said she's doing the audit plan presentation. She's actually doing the presentation concerning the small business property tax subclass, which has a report on this evening's agenda. Thanks.
That's okay. We need to audit the paperwork here. Thank you.
Thank you. Good evening, Mr. Chair. Brandy, if you could bring up the presentation, please. I'm not seeing it on my screen. Are you yet? Yes.
We have it now, Grace.
Okay, great. Thanks very much. Okay, I thought I would be able to see that at the same time. So let me just pull up my version on my computer as well. Thank you, Mr. Chair, for this opportunity to present to you on the subject of the small business property tax class. If you could flip to slide 2, please. A couple of key items on this slide that I'd like to mention to you at the start. The province has not and will not provide a standard or consistent definition of what a small business is. There are many variations on how that may be defined. However, there's no way in those definitions to ensure that we reach one that will capture only the businesses with the greatest needs. The program that we could implement under this tool will be at the cost of other businesses and taxpayers, and it may very well be outweighed by the cost of the administration of the program. And finally, one of the most important points through all this is that there has been no legal administrative mechanism to ensure that property tax relief provided to a property owner will be actually passed through to any small business tenant. Slide 3, please. Up to now, Barrie has been proactive with tax policy that does assist businesses. In 2021, you eliminated the vacant and excess land discounts, which shifted taxes from occupied businesses onto those vacant lands. In past years, you've also been very successful in reducing the ratio that's applied to all business property assessments. These policies, combined with the stable assessment role, because there's no phase-in or reassessments planned for at least the next 2 years, in combination with the reduction of provincial education tax rates, is currently providing Barrie businesses for at least the next couple of years an attractive property tax regime. Next slide, please. Finance staff over the past few months participated in a comprehensive consultation process earlier this year, which resulted in the Small Business Property Tax Class Report, which is attached to your report as Appendix A, and we will be referencing this, and it is referenced throughout the written report. Next slide, please. There are many factors to consider when you discuss this subject. We've noted some of the key ones on this slide. Does this policy tool match with and complement your existing vision for all Barrie businesses? There are items in place already, such as your small business center. Staff are facilitating consultations with the business community. They're providing businesses with resources to assist with growth and talent attraction currently. What really are the target businesses of a policy like this? This policy benefits property owners and may not reach the actual business operators. How do we define small business? In the report, you'll notice in bullet 7, section 4, details no less than 7 different ways or sources that we could use to help us define what a small business is. And you can use any combination of those, which leads to a number of possibilities. The impacts of funding this credit must be thoroughly analyzed in order to ensure that there are no unwanted impacts. The credits have to be funded from other taxpayers, and it's important that we understand where that money will come from. Consultation is required with all stakeholders, all businesses, all other property owners, all business tenants, and all business associations, just for a start. The province will not consider matching any discount that the city provides on the education tax rate if full consultation does not take place, and this is within the regulation. Administrative processes have to be written and established. There are certain authorities that needed to be provided to some staff positions, such as the administrator of the program and an appellant authority for businesses that may appeal. The regulated requirements must be met and full communication is required. And all of this has to be set out in a bylaw. Slide 6, please. This slide is a snapshot, and I'm just going to get there too, so I've got it in front of me, of some very early analysis that we did to take a look at what we could possibly do with this program. You'll notice that what we did here is we took funding across all classes within the city, and we said any commercial property that has a current value assessment of $500,000 or less is considered a small business and would benefit. Very arbitrary rules, but we had to pick something to do some analysis. And we also set the relief at the maximum level of 35%. Doing something like this, you'll see, captures about 33% of our businesses in the city. It provides those business owners with approximately $117 per month in a tax reduction. It increases all other properties within the city of Barrie, including the residential class, by 0.34%. Next slide, please. Then we took the same criteria and we said, okay, let's stick with that $500,000 of CVA. Let's stay at the 35%, the maximum benefit. We still capture those same 33% of businesses, but in this case, we're funding it within the residual commercial class. When we do that, the benefit drops a little bit to $114 per month for each business, but it increases every other commercial property in the city by 1.63% to fund that. You'll notice within the red box, you're basically shifting $828,000 of taxes off the identified small business onto all other businesses. So those are basically the 2 ways of funding it. And that's within a citywide program where we just chose businesses across the city. You'll see that there are pros and cons. Unfortunately, the cons list is a little bit longer. This does capture defined small business as we defined it for the test. There can be no perception of bias with something like this because you're spreading it to all those businesses across the city. And it does give some tax relief to property owners and landlords. Unfortunately, you are placing the burden on other property tax payers. And something as arbitrary as a current value assessment only may actually capture businesses that are quite successful and not really in need of any help. There's no way to know that. It's quite difficult to establish a citywide criteria. Future reassessments would change properties that once qualified and may not. If their value jumps up to $501,000, they'd fall out on something like this. There's no correlation between specific needs of areas or businesses by doing across the city this way. No mechanism, again, to ensure it actually reaches tenants, and this can be costly to administer, as we've mentioned. So we took another approach on slide 9, and you'll see that we only picked businesses within the downtown business improvement area and said, okay, what if we stick with this defined area? So we stayed at the maximum relief of 35%. And we provided, that will provide approximately $233 per month on a tax reduction. What it does do, though, is it increases all other properties in the city, including your residential, at 0.23%. So even to give those limited number of businesses within the BIA, this sort of program, funded across, everybody gets an increase of 0.23%. We then looked at the same thing. Well, what if we fund the DBIA properties and we only fund it across the class? And this will be slide 10, please. When we do that, if we keep it within the class, you'll see that every other business within the city of Barrie experiences a 1.12% increase in their property taxes, and you're shifting about $573,000. So again, pros and cons of just doing a defined area, such as the downtown business improvement area. Certainly less administration. It's an already established area by bylaw. It provides a bit of a higher amount of tax relief to those specific businesses than the citywide program did. But again, the tax relief goes to the owners / landlords. There's no correlation to actual need still. A property is included simply because of its location. Commercial businesses across the city are paying for this targeted relief that could actually be in a greater need than some of those properties. And again, no mechanism to ensure that it gets there. So slide number 12 is just some general comments to wrap this up for you. We note that any program provided would provide some relief to some businesses, but it will certainly burden others. Future reassessments will change most of the criteria used in the program, which will affect people's eligibility in it. There's no ability to ensure the relief reaches the tenants. I know I repeat that often, but I do see it as a large stumbling block. And the cost of the program may outweigh the benefits. Council did request that staff provide a report to this committee concerning a plan to implement a small business tax with consideration of some of the financial impacts for both the benefiting businesses and all other tax classes. So we are presenting that to you tonight for information purposes. And through you, Mr. Chair, we're happy, Craig and I believe Colleen's on the line as well, to answer any questions.
Thank you very much for the presentation, Ms. Marsh, on this, and to your staff as well. Are there any questions from members of committee on this? Councillor Harvey, go ahead.
Thank you, Chair Morales. Yeah, just curious, through the investigation for this report, was it ever determined if there's any other municipalities that have already implemented this or are looking at implementing it?
Through you, Mr. Chair, I did check with many of my colleagues within the OMTRA group, and right now, the City of Toronto is the only municipality that is actually implementing something for the 2022 year. The City of Ottawa is looking at it, but they are doing their analysis and they have not made any determinations. I've also heard from a number of municipalities that they are not considering it in the near future. And that's about as far as it's gone at this point.
Great, thanks. Yeah, I didn't realize Toronto was moving forward with it because I did read their 16-page report, and it pretty much had very similar type of pros and cons that you highlighted tonight. Thank you for the great work.
Thank you.
Thank you, Councillor Harvey. Deputy Mayor Ward.
Thank you, but Councillor Harvey asked the same question I was going to ask.
Perfect. Mayor Lehman, go ahead.
Thanks, and thanks for the work, Grace and Craig. I did have the opportunity, members of committee, to speak with Grace and Craig about this back in the spring, in the hopes that there could be something a little more workable. Toronto, I think Ottawa is actually proceeding with a 2-year phase-in, if I'm not mistaken, but I could be wrong. Grace, I thought maybe they had made that decision. I do know that London and Guelph outright rejected it on the basis of staff reports that were basically said that it's so problematic and it just shifts the burden. So, but the biggest problem, I think, in looking at it in the spring and watching the process in Guelph and London and Toronto and Ottawa is we just can't find, there really isn't a good way to make sure that small businesses actually get the relief. You know, if you happen to be a small business that owns your property, then there's a decent chance that we can design something that would capture you. But in capturing you, we are going to inevitably capture a whole bunch of chains. And unfortunately, because it's a property tax class, by definition, we're not benefiting the business, we're benefiting the landlord. If the landlord is the business, great, then we've hit the target. But in so many cases, that's not the case. So, I mean, I think there's a lot of ways that math can be made to work on this thing, but there's no delivery mechanism that can be made to work really effectively so that the businesses get relief. You know, my understanding of Ottawa and Toronto is they did a 15% reduction, which actually captures a huge number of properties, but at quite a low assessed value. So they're basically taxing the very large properties a little bit more and redistributing that to the lower, smaller properties. And that would have some benefit, I think, in the sense of ability to pay. But the other reality, I think, here is we're late in COVID, and by the time any of this could be implemented, probably it's, you know, in the dollar amounts. I'm looking at the slide here that says $229 per month. I can tell you from consulting with businesses in the spring, it's unlikely that that amount is going to make or break anyone. Every little bit helps, but it's probably not going to make or break anyone. My specific question, Mr. Chair, though, as I was sitting here, is one of the things Toronto wanted to do with this was to very narrowly define who would be part of a subclass and actually use it just for business incubators. So instead of attempting to define small businesses, they just wanted to create a property class that could be used for some very small number of properties. I've forgotten what it was. Maybe Ms. Marsh can, maybe you know, 20, 30, something like that, which function as small business incubators. And then because they're being operated by organizations that commit to passing the savings along, then you really are helping, and you're helping small businesses that are at an early point in their development when the tax benefit really does help them. So I wondered if, are you aware of that initiative in Toronto? Have I got that right? And then I guess the second question would be, if the city of Barrie chose to very narrowly target this to benefit a class of properties that were business incubators, say only 2 or 3, is that possible?
Through you, Mr. Chair, I do understand that the City of Toronto, they have their own act, as you're well aware, the City of Toronto Act, although it mirrors the Municipal Act in many ways, they are looking for a regulation, and I believe they were attempting to focus arts and those type of businesses.
That's right.
And they were doing a lot of work around that. But I do believe they were going to pursue that as a regulation within the City of Toronto Act, allowing them to establish that particular subclass. That is something that the city could pursue by asking for a similar regulation for the Municipal Act. And that often does happen. If Toronto does something first, then there's sometimes a willingness to put it onto the Provincial Act and allow others as well. In terms of this small business class, the research that I did today was they actually set it at 15%, as Mayor Lehman did note, but they simply went with any property with less than a $1 million CVA. So they made it very broad, similar to our first type of scenario that we showed you. But what's interesting about Toronto is prior to them doing this, they already had banding in effect. So they were already giving a lower tax ratio to the properties with less than $1 million assessment and pushing it up to the larger ones. So there's really, what they've done is they've changed from policy A, which was banding, to policy B and calling it a small business class. But the overall effect is not going to be hugely different. So it just, I thought that it was kind of interesting how they did that. And one of the other interesting things about Toronto is, as I looked, that I did note, their tax ratio for commercial businesses is 2.6%. Ours is 1.4%. So there's a huge difference already in how we are taxing. And I had hoped that that came through in our presentation, that the tax policies that the City of Barrie has implemented and the steps they've taken. Toronto also, if I may, has capping and clawback still in place. So when they start shifting these taxes around, the properties that are capped are not going to feel that anyway, because they're already capped at 10%, but the ones that are in the clawback are going to feel it. So now you've taken a policy targeting a group of businesses, but you're not treating them equally because of capping and clawback. So it got very, as I was reading through it, I thought, oh my goodness, I'm not sure I could predict how any one business would have come out of all of that.
Yeah. Well, and if you've got an enormous financial district full of office towers, you jack up the ratio and then you can charge less to residential homeowners, right?
That would be correct.
Works rather well in Toronto and Mississauga, I might add. So we don't quite have that assessment base to work with. What we do have are very large retail, by and large, developments that tend to be, when you look at our highest assessed value commercial properties, that's most of them. And I guess the only other question I had was, I accept the findings of the report, and certainly you'd made similar comments to me, as had Mr. Millar earlier in the year when you were first looking at this, that the problem is really the delivery mechanism, not necessarily the math. I mean, the math of how much gets transferred to other classes can be distributed enough that the overall impact to the other classes we might decide is minimal. If you do it within the class, it's a little more substantial, but by definition, we're talking about shopping mall properties, big box retail, and perhaps the impact there of a few $100s more a month in taxes is less. But I guess my question to you is the impact you're talking about within class. If you can just go back to that first option where you moved $800,000 from the smallest commercial properties to the rest of them.
That would be slide 6 if you wanted to pull.
Thank you. Yeah, I'm just no, sorry, the within class, not the all classes. So 7, I think. Slide 7. Yeah,
correct.
So that commercial, you're moving $800,000 in taxes from the smallest properties to the other $51 million in commercial. What was the impact? I guess it depends on the size of the property, but can you give us some sense of how that 828 spreads across the remaining properties?
I'm sorry, we didn't do that, not dollars of taxes, if that's what you're looking for, because dollars of taxes is strictly the math, as you know, of the rate times the assessment, but the percent is 1.63. All of
so fair
those
enough.
larger
So-
businesses would see an increase of 1.63 of their city taxes.
Okay, so if a commercial business that was assessed at $1 million, for argument's sake, was paying $20,000 a year in taxes, they would be increased by about $400 a year. Sorry, 1%, 1.6, $300 a year. Okay. So I mean, I guess the point I'm making, members of committee, is the math is kind of, I always thought the math was feasible. My own preference would be that we would do this within the class and not across all classes, even though that increases the burden a bit. If I had to stand on any business's doorstep and say, Walmart, yep, your taxes are going up by 1.6% to keep alive, help us keep alive the smaller businesses for whom that's a huge burden, especially given when you look at that distribution of smaller businesses, not smaller properties, smaller businesses, we see a lot of the hard hit sectors overrepresented: food and accommodation, retail, tourism related businesses. The problem is those businesses are not, there's just no way to make sure that they get the benefit. And even at a 33.9% decrease, the amount is tough to make material in their daily budgets or in their monthly budgets. It's just not enough. So, you know, earlier in the year, I argued for any amount helps, and I still believe any amount helps. If you're in a sector that's been heavily hit by COVID and you're struggling with inflationary costs now in supply chain and labor and so forth. But that being said, I think the findings of the report, it's a little disappointing, not the work that was done. I think we've received excellent advice, very thoughtful advice here from Ms. Marsh and Mr. Millar and others. I tend to come to the same conclusion that others have in other cities. My colleague in London said, I would never shift the burden to other businesses to benefit a certain type of business. I could maybe make a different case, but I can't make it based on this information. We're just not going to be able to hit the target and benefit the businesses that need the help. And so it doesn't seem workable, Mr. Chair.
Thank you, Mayor Lehman. Really appreciate those comments. Any other members of committee have questions or comments? Those are really fruitful discussion. Before going to non-members of committee, I'm just going to jump in here with some comments, and hopefully it'll inspire comments or questions. I'll start with whoever made the slide. Thank you so much for putting the names of the team at the end. Ms. Smith, I forgot, I had heard your name, but I also want to obviously acknowledge you and any other staff that were part of the team. So really good idea putting it at the end. Also, Ms. Marsh, that was an incredible, not only presentation, but some of the answers to the questions. I felt like I was back in business school in Guelph, and you know, this was kind of a case competition. The reality is this is real life and real implications. So I've got two questions, I believe. On slide 9, if we can go to slide 9 on the big screen, you have 0.23 increases all other properties in the city, including residential, is an increase of a material increase of 0.23 based on proposal A. On slide 10, it's 1.12. Increases all other commercial properties in the city 1.12. As I'm interpreting this, Ms. Marsh, this is not a vis-a-vis comparison. This is apples and oranges. So why did we choose on PowerPoint 9 to put 0.23 all properties and then 1.12 only commercial? If somebody hadn't caught that eye, they would just look at those numbers and go, oh, okay, that doesn't work. But in reality, those aren't comparable benchmarks. Is there a reason why we did this?
Yes, Mr. Chair. In the difference is on slide 9, you're sharing this across 27,000 properties. of all different values, including our industrial class, big properties, small properties, and every home. So when you share it over that big of a base, the piece that each property picks up, or even each class picks up, is much smaller. When you keep it within only the commercial class properties, you're sharing it amongst a very lower number of properties, so they each take a bigger piece.
My apologies. That makes total sense. As a follow-up to that, I echo the comments from the mayor. There's no, and what you've said and what everybody has been saying, there's no way we can ensure that it's going to reach the business who really needs it as terms of their cash flow. I agree with the example. There's small businesses that own their own building, and maybe we could do a specific program to that. Not all business owners who also own the building are equal. Some just bought it maybe a year ago and they're financed right to the percentage points. Some have owned the building in the family or themselves for 10, 20 years, have no mortgage on it, saw their market value go up significant, can just refinance it and treat it like an ATM. So, not all business property owners are necessarily equal in that sense. I'm wondering, Ms. Marsh, and this came to me while you were presenting, if we can't address it from a discounts perspective, could we create policy to increase incentives? And this is very rough because I literally was writing this down as you were presenting. What if council topped up the CIP, created a slightly different column within the program, and the column essentially was expand the CIP and give money to business owners that do renos for the purpose of increasing customers, increasing signage, increasing marketability for these small businesses, as well as we could even loop in accessibility renos. Those always kind of get put in the background a bit, but anything that's will bring more customers with an accessibility perspective. And if we did such a program and funded it within the class, so we're keeping it to the big box stores, we're keeping it to more suburban, kind of your slide 10, wouldn't that be more tailored? And we could do it. Now, does that put cash in the pockets of businesses? No. And I think the reality is there's no mechanism right now for us to ensure that. But if we are essentially topping up the CIP program, creating a dedicated stream for this, we are going to business owners who might not have any incentive to help out their tenants and say, listen, if you can come to us, if you can do renos that meet this certain criteria of getting more customers, improving the streetscape, improving the safety and the marketability, we are increasing the value that our small business tenants are getting. We're not increasing their cash flow, but if in their mind they were paying I'm using a very generic number, if they were paying $3,000 a month of rent, they were getting $3,000 of value. But after the application, if their landlord goes through with it, now they're getting $3,300 of value of rent, and they're still paying the old rent for now, because obviously rents go up. Is that a better way of tailoring our intent to assist businesses by focusing on an incentive policy that has spillover effects instead of a discount policy?
Mr. Chair, I'll have to refer that to Mr. Millar. I am not an expert in the CIP programs and how they work in any way, so could not speak to that. I've not seen anything within the small business class that allows it to be combined within a CIP, but that's the only comment I would have. I'd leave it to Mr. Millar.
Thank you so much. Mr. Millar, I see a smile, so I'm bracing.
Yeah, I'm laughing on two fronts because Grace is one of finance staff and she's referring to me as Mr. Millar. I thought most of finance knew it was Miller. I know it's spelled AR, but it is pronounced ER. So that was one. Two, and the second reason I was laughing because she said she's not an expert in the CIP and she referred it to me as if I am the expert in CIP. So I'm not sure we'll be able to answer that question tonight. It's not applicable. We're not able to do that under this funding regime. I do know the city used to have under their downtown, I believe it was under CIP, there was a facade loan program where certain criteria was put in place where applicants applied for and received some loans to improve their facades. I do know that was a few years ago and that it's changed. There was pluses and minuses to that program, but the specific detail you're asking, we would have to do more work to really give you an answer. And we would have to probably pull in Ms. Bansfield's group for that analysis.
Okay, and appreciate that, and Miss Marsh, Mr. Miller, I didn't mean to spook it. I literally was writing as you were speaking, so your answers to Mayor Lehman's questions, Councilor Harvey's, were enough to kind of get the gears turning. Mr. Miller, I don't know if this is a Ms. Banfield question or yourself. I really had a reflection upon the mayor's comments, which was, knocking on that door saying, you know what, big box business over a certain square footage, yeah, your taxes might go up. This kind of makes sense. Would we, whether it be through a separate class of taxation for existing businesses or for future builds, doing it through DCs specifically for a certain square footage, would we be able to add a charge to new retail developments, commercial, for essentially big box stores, something over a certain square footage, and then take that money, just an extra little charge, and take that money to fund said CIP? So in plain language, we're taxing a little bit extra to centralize big box stores and leveraging that money to provide value to essentially smaller businesses, older buildings, the walkable downtown, or possibly outside the downtown businesses that have been cannibalized over the last couple of decades over the spread of suburban businesses. And we could maybe do that through the allocation of saying, okay, your building, here's your building permits, you're asking for 300 parking spots. It's going to be X per parking spots, which also has, environmental benefits and all that. Very complex question, literally reflecting upon this, but is that something that from a DC's perspective, we can do, or for existing businesses with a separate tax for a different asset?
Through you, Chairman Morales. So through the DC Act, you could do what you're proposing to do. Can we do it through other legislation? Again, we probably have to talk to Ms. Banfield to see if there are any options that exist for that. I mean, theoretically, if you had enough, if your assessment base was diverse enough and you had a lot of box stores, like large stores in your municipality, then the options would be to do something using this small business tax class. The challenge is to generate the revenue that you're seeking under this mechanism. Barrie doesn't have that assessed base that enough box stores to really make it feasible or worthwhile. Larger municipalities, Toronto has more options. But outside of this regime, if what you're asking, we would have to do more research for you.
Okay, perfect. And last question, somewhat related, and I'll go to non-members of committee. As of this moment, and I'm sure the numbers evolve every couple of weeks, are you aware of how many business owners of basically downtown Barrie, but anything that's kind of an older building, a smaller building, have applied to CIP, to the new CIP for various reasons, and have maybe taken a bit of the money to do facade improvements, improve the marketability for their tenants during kind of COVID pivoting? Do we know either the number of applicants and possibly the magnitude of the monies? Ms. McCall.
Thank you, Chairman Morales. So I don't have the actual number, but the grant that is under, or the program under the CIP system that is most applicable would be the redevelopment grant that is really targeted towards brownfield redevelopment of sites. And as you may recall from a recent report on the CIP program, that particular grouping of funding was was less utilized, and it was recently redistributed to the affordable housing grouping. There's 3 different groupings within the CIP currently: affordable housing, the heritage preservation, and then the redevelopment. The redevelopment one has not been as well utilized at this point, and funds were shifted from it to the affordable housing because the affordable housing grant had $1.70 left in it, I believe, for the remaining intake period.
That's a good problem to have as long as we solve it. Thank you, Ms. McAlpin. Okay, those are all my questions and comments. Non-members of committee, any questions or comments? For anybody? No? Perfect. Thank you so much, Ms. Marsh, Ms. Smith, and Ms. Millar for the presentation information. Definitely very thought-provoking. Moving on to, after the presentation, if there are no concerns from members of committee, we'll bump up section 6.1 reports to committee because it's related to what we just talked about. So that would be 6.1, a staff report concerning the small business property subclass to be, small business property tax subclass. The report to the Finance and Corporate Services Committee dated November 16th, 2021, concerning the small business property tax subclass be received for information purposes. Could I get a mover on the Deputy Mayor Ward, Seconder, Councillor Thompson? Any questions or comments? Go ahead, Mayor Lehman.
I do have one more question, Mr. Chair, and I support us just receiving the report for information purposes, but Ms. Marsh, if we were to create a separate tax class for smaller commercial properties versus larger commercial properties, is it possible to pull the lever of tax ratios so that you end up increasing the ratio for large commercial properties while holding constant the ratio for smaller commercial properties for a net increase of revenue, for a net increase? Not a
Mr.
redistribution.
Chair.
Sorry.
Oh, not a redistribution. Banding may do that. It's a very blunt tool. You pick an assessment value. You say anybody below it gets this ratio, anybody above it gets this. You do it by way of a discount. You give a 20% discount to the low band. Those taxes automatically shift to the high band. So yes, banding is a tool that's available that may achieve that. That is the only other one that I'm aware of.
Okay. And you don't actually have to create a separate class for banding. We could just do that today under existing classes, should we choose.
That's correct, through you, Mr. Chair. The properties are already set in a specific class by impact. We don't control that. So that's why I say a blunt tool, because it's every commercial property by their definition, which their definition actually is any property that doesn't go anywhere else. If it's not a farm and it's not a house and it's not industrial, it's commercial kind of thing.
Well,
so it's very blunt in that regard. The properties in that class are in there, and you can band assessment that way.
okay, so that actually begs a really important question, which I should have asked long before 2021. In Barrie, we have a lot of quasi-commercial in what was an industrial zoning in the south end of Barrie. That's how much of the Mapleview commercial area developed. Are those properties assessed as industrial or assessed as commercial?
They are assessed through you, Mr. Chair, as commercial according to their predominant use.
Okay, so,
so predominant use is the overriding factor.
Right. Okay. So all those what are called industrial multiples on Bryn Drive and Commerce Park and places Barrieview that are industrial multiples, but containing what MPAC feels is a commercial enterprise rather than an industrial enterprise by the nature of the use, not really what they're selling or doing. I guess it's by what they're doing. Is that correct?
Through you, Mr. Chair, that's correct. The definition of industrial speaks to processing something, creating something, not creating, processing. And I believe there's one other word that speaks to a manufacturing process. That's industrial. And if it's not that, then it's commercial.
Yeah, and this is the problem I've had for 10 years where people are zoned industrial but assessed commercial and not happy about their taxes as a consequence. But okay, that's very interesting. So that may be worth, I guess I'm just putting a pin in that, Mr. Chair, because I think the banding issue is an interesting one that we should talk about at another time. But I'm happy to support the recommendation for tonight because it just doesn't seem like there's a way in this to achieve what I think we would all like to, which is support small businesses in our community that need it or that needed it and probably continue to need it as they recover from COVID. So if this isn't the tool, we'll keep looking and we'll keep doing the other good things, I hope. But I really do appreciate staff's work on this. Thanks, Mr. Chair.
Thank you, Mayor Lehman. Any other questions from members of committee? I had a quick question for Mr. Millar. Again, love the example the mayor had about can we quantify, again, this is Millar. Did you know we used to call RF, and it was actually RF, yeah, it's so the break even point, right? Like if you're increasing big square footage, making that subclass, and that's an increase in revenue, you're obviously, and decreasing the other one, there's, can we calculate the net gain or loss, the impact, assuming, well, not of course 100% uptake, we're changing the rules. How quickly could staff get that number for just general committee? Because yes, it is a blunt tool. I don't see it as a negative blunt tool, because if we do decide to go down that road, we will have a pretty good idea about net gain, net loss. Now, the assessed value down the subsequent years might be influenced a tad. So that's an ongoing number adjustment, but I'm wondering how quickly we could get that equilibrium number from staff.
So through you, Chairman Rouse. So we do set the tax ratios in around April of each year, and that's was the banding exercise that Mayor Lehman and Grace were talking about. So if you were going to do something like that, that would be the time to do it. If you want to give us parameters of exactly what you want us to look at, we can look at it now. The value in that's probably, as I say, it's more useful to have that information when we're doing the ratios in April timeline, but we can do it if you give us the parameters and exactly what you want us to see and do. I will share with you all that we've benefited from Grace's wisdom the last 2 years at the city. And sad to say, happy for Grace, but sad for us. Grace will be retiring from the city on December 17th. And we have started our recruitment for her replacement, which is some big shoes to fill. So if you have some parameters you want us to give, then certainly do it now. Otherwise, it would be something we would look at for council in around April.
Thank you, Mr. Miller, for that information. I think the good thing is if we maybe had that information, it could be the stepping stone to allow general committee or finance committee to consider whether to go down this road. And then again, if we explore that whole CIP expansion or funding it, we'd have a revenue source, and then we could have a outlet to properly channel it. Ms. McAlpine, I was wondering if you had any comments on this conversation. This obviously does touch your portfolio a bit, so I was wondering any words of wisdom for council as we contemplate and put pins on a lot of different ideas.
Thank you, Chair Morales. I think just a note on the CIP, and Bala may wish to add to it, but any amendments to the CIP program would require a public meeting and an entire process for that. That's something to consider. And depending on how targeted anything might be, we'd have to be cautious about being seen as bonusing specific businesses versus a grant program that has a wider potential application. There are probably any number of combinations and permutations that we could look at. It's really important, and I think Toronto dealt with this quite well in their report, is to identify what objectives are you trying to achieve first before trying to set the parameters. That would be my suggestion. I think really you need to, what is the outcome you're seeking? And then we that would allow for us to better deliver. Otherwise, if we just set the parameters, you may not achieve the broader outcome that you're looking for.
Perfect. Thank you very much. Non-members of committee, any questions or comments? Councillor Kunkel.
Thank you through you, Mr. Chair. Just a comment again, I think to echo well, at least personally, I've benefited from the conversation through Grace and the details coming to the table. So while I'm not a voting member, how valuable it is to be at Finance and Corporate Services around the knowledge capital that comes forward through finance. So my appreciation and best wishes to Grace.
Definitely much earned. Mayor Lehman, go ahead.
My only question is, if we pass a different recommendation, will Grace not retire? And we can just push that by a year. Grace, we can work on this like endlessly next year. That would be really great.
Through you, Mr. Chair, no. I couldn't be more direct, could I? Those cruise ships are leaving and I'm on the manifest.
We wish you the very best. Thank you for your report.
Thank you.
Perfect. Thank you. Are there any other questions, comments, or amendments to the motion as printed? I'm just going to read it again. That the report to the Finance and Corporate Service Committee dated today concerning the small business property tax subclass be received for information purposes. Any amendments to have staff looking to see what that net gain or loss would be in that scenario, or we can take care of that later? Okay, seeing none, as printed, I'll take a vote. All those in favor, please indicate. Unanimous support. None opposed. Thank you very much, members of committee. We don't have any standing items or referred items, but we do have 3 advisory reports in section 5. Could I have a member of committee put the following advisory committee reports on the floor to be received? That includes the report of Seniors Advisory Committee, October 25th, 2021, report of Town and Gown, October 27th, 2021, and the report of International Relations Committee dated November 2nd, 2021. Can I somebody put those on the floor as printed? Deputy Mayor Ward, seconded by Councillor Thompson. Questions or comments? None? All those in favor, please indicate. Passes unanimously. Thank you. And then finally, in reports to committee, section previously 6.2, now 6.1 is the County of Simcoe capital contributions. And the motion is that the report to the Finance and Corporate Services Committee dated November 16th, 2021 concerning the County of Simcoe capital contributions be received for information purposes. Are there any questions or comments from members of committee? Go ahead, Councillor Jim Harris and then Mayor Liam.
Great. Thank you, Chair Morales. Put that on the floor as printed. I just had a couple of questions and I trying to understand certainly what we have in front of us. I know the county is coming. I had a quick chance to chat with CO Prowse and Ms. McAlpine earlier, but just looking at, I think we're trying to understand, if I remember our motivation correctly, was are we getting value for our contributions to the county? And if I'm kind of getting things correct, when we look at the City of Barrie capital contribution on page 2 of the report and the county major facility construction totals. So, our contribution is 15.12 million in that first 5-year period. The county total of cost is projects was 29.21. Simple math suggests that's 52% of that total was the City of Barrie contribution. And then similarly in the next 5 years projected, we have City of Barrie contribution 37.79 million, and the total from the county of capital requests each year being 68.03 million. So that puts us at 55% of the total. Just wondering, so we've gone up about 3% of the total is Barrie. Is maybe through you, I'm not sure who the best person to answer this question would be, is it Mr. Millar? But is that consistent? So that growth, our percentage of the total is going up 3%. Does that make sense? Or what does that tell me? Or do I have that number right? Or
So through you, Chairman Morales, to Councillor Harris. So what those tables are really it's showing you is ultimately the city has big commitments on the county's capital program. What it's kind of showing is how we pay for it. So the last agreement that was signed with the county in 2018, because of complaints from both the city of Barrie and the city of Aurelia, they used to bill us annually the total cost of expenses they incurred, and it caused great swings in our yearly commitments. So they came back to us and said, okay, for the major capital works, the Aurelia and Barrie can pay us back over 10 years. So they're more or less giving the city a loan. And the idea being that's to smooth our annual payments, but build over time. So the contributions you see in, like, for example, in table 11, it shows you more or less what we've been paying each year. Starting in 2018, that's when the 10-year smoothing came in effect, and 19 and 20, we're getting the benefit of that. If we didn't have the smoothing, we would be paying $10 million right up front in 2019 per se. So we were trying to demonstrate, because it is a bit confusing, what we're paying and also what the commitment is. We still have to pay the full amount, but it's spread over a longer period of time. And that's where in the report, it shows you kind of the forecast, the appendix that the county gave us. They showed us what we've spent historically, and part of the request, the direction from council was to what's the location of these capital projects. So it shows you that, but then as well as how much we're spending over the next 5 years in their forecast. So that's the intent of what it's showing you, but it's just got that added complication is, but we're paying them back over 10 years. So the bottom line from a financial lens is that our county capital reserve that we are funding right now with our taxpayers' money is under a lot of pressure over the next 5 years. And we're going to need to find a strategy to increase the amount of money that we're paying into that reserve.
Yeah, thank you, Ms. Miller. Follow up. So thank you. I understand the smoothing because, you know, the big projects happen and then, you know, you don't want them all paid in 1 year and you have some consistency with that annual contribution. But my question is are we getting value over that 10-year period for our contribution? And as you reference the appendix, and that's helpful. If right now we're in a housing crisis in Barrie, for example. So if I was to take the two separate 5-year periods, 2016 to 2020, if I did the math right, we received 9.8% of that total number that was 15.797 million over that first 5 years. The next 5 years, we're scheduled to receive, it appears, 13.151 million and change out of a $43 million total, which would bump us to 30%, overall 25% of the total over a 10-year period. So my question would be, are we getting good value over a 10-year period for investment in social housing towards the county?
So through you, Chairman Rouse, to Councillor Harris. Great question. I'll take a stab, so feel free to jump in. The motion that we were given wasn't to assess, are we getting value? It was to give information on what are we paid and what are we paying going forward. So that's a big question. It's a good question. It's really more encompass of the overall agreement and the services that the county's provided. They're not just providing, you know, the capital, there's the operation part of it as well. So to answer that question would be probably a much bigger analysis than what we've provided today. It's, again, we were just providing historical and forward-looking information, and I'll defer to any other staff member if they want to jump in.
Thank you, Chairman Morales. As Mr. Miller has indicated, the analysis of benefit to the community for the contribution on both an operating and capital basis would require a significantly more effort to review that and the reality of what other options might exist, as some of the things that are probably the largest pinch points or areas of concern for the municipality in terms of contribution versus value are items where if we're not working with the county on this arrangement, we would need to be in the line of business ourselves. And that would also need to be factored into evaluation before you could provide something that was meaningful, at least in my view.
Thank you very much, Ms. McAlpine.
Yeah, yes, yeah, thank you. Yeah, so I think that's, I mean, I maybe defer the members of the committee, but I think for me, as I think about, and thank you for the report, it's very helpful, and it's, it's shone some light. Obviously, we don't have any in Appendix A in long-term care. There's no money to bear because we have no, obviously, providers, at least on that list that's in front of me, that are receiving, oh, pardon me, we do. I missed one. Simcoe, no, it's not Tecumseh, not Barrie. So I guess, yeah, my question still is, and I think all those factors you mentioned, Ms. Kaplan, would apply to other municipalities as well. So they don't have that, so they have the county do it. So I think that would be, it would seem to be, and now obviously we're bigger, but I just wondering, again, as we try to look towards our significant housing crisis in Barrie, and when I see the investments in social housing and the percentages, and I don't know if I got that right at our contribution of the total being, 52 and then 55%, yet over a 10-year period in social housing, we have 25% of the investment in this area. That just seemed to be a curious set of numbers that maybe there'd be value in for Barrie residents to have some sort of understanding of how our social housing need can be met better with a more equitable amount of the funds that are put to the county. So I'll leave it at that, but I thank you for I know the county's coming. We'll be talking with them, I believe, with budget time, but it just seems like an interesting set of numbers. So thank you.
Thank you, Councillor Harris. I'm just going to go quickly to Mr. Prowse before Mayor Lehman, as how you indicated.
Thank you, Chair Morales, and through you to Councillor Harris. I think this is certainly one of the discussions Barrie City Council has had for a long time. And certainly the county are the best to talk about the services they provide. What I would remind members of committee is this information is a point in time. If you talk to the residents or the representatives from Aurelia, perhaps a year and a half ago, as to whether they were getting good value, they might suggest that they were not. And then lo and behold, $60 or $70 million is spent on a facility or announced on a facility in Aurelia. And that relationship looks much more equitable to the people in Aurelia. And to be frank, I think Barrie is in what you could describe as a trough, although our need is certainly acute. But we do know that there are projects coming, which members of committee are aware of, where we are just at the beginning of those projects. And those will be expensive projects. So perhaps if you did the similar analysis in 3 or 5 years, you might find that that relationship is a little bit more equitable than you're finding it today. So it's certainly not for me to defend the county. They can do an adequate job of doing that themselves. I would just remind you that the information is a point in time as opposed to a holistic look.
Yeah, thank you. May follow up. And thank you, Sarah Prowse. I think that's, if this 10-year period of time that we're seeing in front of us, and that's showing us as having maybe a disproportionate amount of the investments, then the next decade we'll see us receiving a disproportionate amount in our favor, then I'll look forward to that increase in us receiving a 10-year kind of rise above the average. That would be great. Thank you.
Thank you, Councillor Harris. Mayor Lehman.
Thanks, Mr. Chair. Yeah, I got a few things to say about this one, and I'm glad it's here at committee. I guess first, in terms of where this goes, it's unfortunate because this report comes after the county budget. So we're not able as Human Services Committee members to use it in the discussion over what the county's asking of us this year. However, they are coming as a service partner to make their presentation, I believe, next week. I got a ton out of this, both the staff report and the appendix. The staff report, I would draw committee's attention to, as Mr. Millar was explaining, paragraphs 11 and 13, which is what we anticipate making as a capital contribution to the county it's what we did over the last 5 years. So it was basically about $3 million a year, totaling 15. In the next 5 years, that's going to go to 38 million over 5 years. And that's with the payment plan. So look at paragraph 14. What we're actually buying, I mean, this is like buying a couch on layaway. And what we're actually buying is a couch that's twice as expensive as that 5-year payment plan. It's a $68 million. So compare paragraphs 14 and 12. The county was very good too, and I remember that rancorous discussion at County Committee of the Whole, and Trevor Wilcox did great work with Craig to figure out an MFC payment program. But basically what the county said is, yep, we understand that your furniture is going to get a lot more expensive, but we're going to offer you a layaway plan. And they gave us very favorable terms. It's interest free, which is they did not have to do. So I want to give a shout out to them for that. But the reality is their capital plan is going from $29 million ask to the city over the last 5 years to $68 million over the next 5 years. So absolutely right to say, are we getting value from that? And I have a few thoughts on that too. But just on the fiscal level, that's an enormous pressure. So even with MFC, we've got to fund that county reserve to the tune of something more like $9 million a year. And we've been funding it at $3 million a year. $6 million a year is a 2% tax increase just to fund the capital portion of the county's program. So the very expensive decisions that have been made by the county of Simcoe to proceed with major projects it's coming home to roost over the next 5 years. Now, to the point around value, and that's where the appendix was really, really helpful to me. Because where do you take this information? Well, there's a service agreement to come, but there's also some choices around future budgets to come. And that's where I think we will need to have the discussion around the affordability lens as the largest funder. The city of Barrie is the largest funder of county projects in these service areas. And if I look at the value piece, I mean, I did the same math you did, Jim. I said, what percentage of the spending is in the city of Barrie versus the overall contribution we're making? Is it around 25%? Because that's around what we contribute, and the rest of the county member municipalities contribute 75%. So in a situation where we're seeing 25% of the funding, that seems equitable. That may not reflect the need for services. And I think for housing and social services, there's a strong case to be made that more should be spent in Barrie. But if you just look at the math that's in the table in the appendix, under paramedics, we're actually doing about right because of the first responders campus. If you look at social housing, it's, I think, as you said, on the go forward, it's about 12 or 13 million out of 43. That is a reasonable, to me, share of, it's about a third. On long-term care, we have like 14 residents in county homes, and we're looking at a $14 million, that's $1 million a person. Just think about that for a second. Capital spend on long-term care. So, in raising these issues over the years, members of the committee, the answer, and Mike, I think, would give you the same answer, is the county will say it kind of comes out in the wash. You have positives where the city does better than perhaps its share, and you have negatives like long-term care where the city does not receive service levels commensurate to its spend. I've been willing to accept that answer previously. I'm really not willing to accept that answer for the next 5 years on long-term care because that capital versus the benefit received, we do have choices around our long-term provision of long-term care subsidy. And if we have to explore those through the service agreement negotiations, I absolutely believe we should do that at this point. Now, I also believe over the last 10 years, we've tried to be regional leaders in Central Ontario and in Simcoe County specifically. We are fire dispatch for 26 municipalities, Mike, I think. 27, whatever the number is, most of Simcoe County and Muskoka. We should be very proud of that. We provide partner services. We provide access to city services for residents of the county of Simcoe at discounted rates, in some cases for free. And I think our partnership with the county has been excellent over the years, and it's allowed us to do things like save $8 million on a police headquarters by partnering with the paramedics. That actually was a great project. It wasn't cheap, but it was a great solution because we had a willing partner. And in a lot of separated cities, the relationship with the surrounding county or the region is not what ours is. We have a very positive and usually productive one. But this memo should be a wake-up call, because the scale of difference in the capital requirements is going to really hit Barrie taxpayers. And there's two issues. One is how expensive their capital plan is. Two is what value we're receiving for those dollars. And while I would say the increased spend on social housing is absolutely necessary, and it's necessary all around the county, there's real fiscal pain there. We're probably going to receive the benefit because of the Barrie project that they're now proceeding with. I might not have said that a year ago, just as Mr. Krause said. He's totally right. It ebbs and flows. I'm not unhappy there. I'm really concerned about that long-term care spend, and I'm concerned about the overall price tag, because I'm not sure our taxpayers are going to be too happy with the level of tax increases on top of what we just saw in our own long-term financial plan in terms of pressures. So sorry, I did want to make a bit of a speech / rant about that tonight, because I'd asked for the information in June because I knew we had a budget cycle with the county and we have a service agreement negotiation next year. And I'd be really interested in what other members of committee think, because I think we can receive this for information tonight, but at some point we should give our staff some direction on their approach to that service agreement. And I don't want to leave the impression for those watching that I'm in any way dissatisfied with either the work of county staff or our partnership with the county. I think we have a tremendous partner there. However, in aggregate, the cost is now unaffordable when it comes to the major capital plan, the major facilities in the capital plan. And I really do have an issue with the long-term care piece. I just I can't imagine standing on a doorstep and explaining to Barrie residents that cost versus that benefit in terms of the service delivery. Everything else, I can see it. I quibble with the price tag, but with the long-term care, I just don't see the benefit. So those are my remarks, Mr. Chair.
Thank you, Mayor Lehman. Deputy Mayor Ward.
Thank you, Chair Morales. I just wanted to point out just further to CAO Prouse's comment, just as a good example, if this had gone 1 year previously to 2015, the $11 million Brook Street project would have been captured in there, which would have made it look completely different. And that was a seniors affordable housing project, and it's not captured in here. I think 800,000 of it's captured, but the previous amount would have already been done. It opened in 2016, so the major cost was just before this. The question I had though was for staff, just about the service agreement, and I agree. And in fact, it's always, I mean, for years, the long-term care has bothered me. It's actually better than it used to be. It used to be much worse. We used to be paying it on assessment. Now it's based on partly 30% assessment, 70% actual use, Barrie residents in there. But I guess my question for staff was, when it comes to negotiating those service agreements, it's obviously the county's trying to protect interests and we're trying to protect ours. What's the fallback equipment, the position if we can't agree on something? If we disagree on some matter, does the current agreement just carry forward, or what happens in those cases?
Ms. McAlpin.
Through you, Chair Morales, to Deputy Mayor Ward. Yes, there is a provision in the existing agreement that it carries forward until agreement is reached. And what has occurred in the past is we've looked at what other jurisdictions have done who have a similar shared service agreement, and whether the apportionment and the method of apportioning is comparable or advantageous. We also have the third partner to keep in mind with Aurelia, that all three councils must agree to the terms of the agreement and try and align something that no one will be particularly happy with, but we will all, it's a try compromise, I would say, where all of the parties would like something better, but recognize that any benefit to any one municipality will result in greater expenses to the others and likely not something that's agreeable by those councils. So trying to find that balance has been a challenge, and why we've altered some of the methodology over the years in terms of apportionment. But it's not something where you tend to see dramatic swings because it has impact on the remaining partners, and the ability to achieve their consensus or approval of an agreement that negatively impacts them to the benefit of Barrie is not high.
Okay, thank you.
Perfect. Thank you, Deputy Mayor. Tug of war. Councillor Harvey, go ahead.
Thank you, Chair Morales. Just a question for staff. Doing some quick math with the incremental increase that Councillor Harris spoke about, it appears that the percentages are directly correlated with our population. Is that true when it comes to actually them determining it?
My apologies. Through Chair Morales to Councillor Harvey. So each of the services is determined on a different basis, whether that's 100% weighted assessment versus or caseload, or in some cases a mix of the two. So certainly population has an impact, but generally the assessed value, the weighted assessment of is the majority of the system methodology that's used for determining it.
Okay, and just to follow up to that, because obviously if things are coming up for renewal, obviously we're pretty much tied in when it comes to paramedic services and things like that. When it comes to the remaining areas, do we have an ability to remove ourselves from the county and start operating those sectors on our own?
Chair Morales, through you to Councillor Harvey, to remove ourselves from long-term care, we would have to be in the business of long-term care or find another arrangement that would meet the provincial definition. And of course, and since the province designated the county as a service delivery agent, they might be required to approve any different arrangement, whether that's in long-term care or in community services. So long-term care in particular is the one where you would need to, there's less, you would need to get into the business. The rest of them, I don't believe we really have the flexibility to extricate ourselves from. But I can look and see if there are changes to the legislation since the last time we reviewed that. It's been a few years.
Okay, great. Yeah, because I share my concerns that have been raised by several others. And like, I mean, it's not the first time we brought this up. I think the first time was 2 years ago when the county presented where I kind of got some looks shot at me with some of my questions that were being asked of them. Because I do have grave concerns. You don't have to look at these charts very long to figure out that I think we're getting shortchanged, and it's solely based on the fact that obviously we have the greatest population in the county. And especially when I look at the paramedic end of it, and now I see that the Southwest Barrie Paramedic Station seems to be getting pushed off further than what I was originally told about a year ago, which I find is concerning also. But when you start looking at all the other sectors here, you don't see that we're even getting close to our fair share, even with the latest project of the affordable housing that was announced on the old OPP lands. And that tries to save face a little bit, I think, because without that, this stuff would look really, really glim. But I'll leave my comments at that. But I think we need to stop necessarily talking about this and doing some action on this piece, because like you say, Mayor Lehman, it's a difficult conversation, especially if residents actually start following this to knock on someone's door and try and explain that they're actually getting value for the money when you look at the amount of money we're paying in comparison to what we're getting back. It's definitely clear that we're servicing the rest of the county.
Thank you, Councillor Harvey, for those comments. Any other members of committee have any questions? No? Members of non-committee, Councillor Kungle?
Thank you, Chair Morales. I think building on kind of how do we move to an engaged conversation, wondering if staff could identify the process that typically occurs. So, should we proactively be engaging the County of Simcoe to identify that, there are points of conversation we'd like to have in the interest of perhaps us not carrying over if we can't come to an amicable compromise, and then living with the current budget that we have into 2023. So I was wondering if staff could identify in what part of 2022 does a conversation begin around a review of the agreement? Because I'm assuming it would be signed in to be effective January 1, 2023. Could staff manage my assumptions or clarify how the actual negotiations happen?
Chairman Morales, through you to Councillor Kungle. So the negotiations have happened in different ways over the years. In the further distant past, Council has asked for a review of options to look at, and a review of other service agreements in terms of ones that in other jurisdictions to determine where the value is. I can certainly tell you that based on those jurisdictions also share similar concerns on apportionment of costs and any agreement that they've been able to achieve. So if council provides direction on specific areas that are of concern or they're seeking a review on, certainly that can be undertaken. The agreement would, as it exists, would carry on past the end of 22. If we weren't able to achieve agreement, I would say that is a much longer process, and it's unlikely that we would get to a new agreement for January 2023 based on the concerns that council has recently raised and the scope of those for review and discussion with all three parties. Staff regularly meet with the county and have certainly shared that there are concerns with the agreement and an interest in reviewing the agreement. It's done automatically, whether or not council raises any concerns, staff review it. But if there are specific areas that you would like us to focus on, that certainly would be helpful. It helps in those discussions if we have something that identifies specifically in a motion what council's seeking. I think that gives greater weight to the discussion.
So I guess I'll move to a comment, Chair Morales. While of course a non-voting member, I would be interested in identifying, having more information about knowing that there's different weighted scales and ratios, especially tied to long-term care. What parameters are we constricted to, and how would a change negatively or positively impact our position? So if we hypothetically said, can we change to designate a long-term care home when that maybe isn't, and very more formally, would that actually drive up number of cases because number of residents probably would be higher? Are we actually look at increasing our proportion? So those are the things I'm wondering about. So could we move forward with information to come to council in some way or back to this committee where we could start to appreciate an understanding of the scenarios that dictate cost to long-term care and options that might be viable around maybe looking at balancing value for money and other expenses we're incurring tied to capital.
Perfect. Thanks so much for Councillor Congo for those comments. Any other non-member, any counselor who is not a member of the committee have any questions or comments? Go ahead.
So I had one more that was a separate topic. I guess if that's not coming through a motion this evening, then I'll look to see if that's a general committee meeting. I'm not sure if Ms. McAlpine would give direction on that, but I am keen to look at how to move forward some action to staff.
Chair Morales, through you to Councillor Kungle, as a first step, I might suggest that the county will be here next week to present their budget. What might be valuable is to request that the county provide a presentation. The present at Finance and Corporate Services, I think, is probably a prudent space for that. Regarding outside of their budget, but just on the services delivered, and that I think will give members a broader appreciation for the services agreement and the challenges that the county may be facing, and challenges in negotiating between three parties. I would suggest you might want to do that before you provide any direction on parameters, is to have that background, because they're also limited in terms of the funding that they receive provincially, and that has a significant impact on, they're still dealing with provincial legislation and direction that sets the establishment of the funding they receive based on 2018 numbers, and doesn't reflect the growth in this area. So those are some pinch points that may be outside the agreement, that may be things that council might also want to consider at that time.
Okay, thank you for the direction. I'll take that away. I had one final follow-up question, not really follow-up, but specific to the memo, and I'm recalling a quick dialogue from the Human Services County of Simcoe meeting. We were on Committee of the Whole when we were talking about the budget. And I guess it relates mostly to page 3 of the memo, item number 17, when we talk a bit about the capital reserve and the forecast around $1 million deficit at the end of 2021. And I think, if I'm not mistaken, Mr. Millar, you spoke to needing to figure out a way in which we contribute to that capital reserve. I didn't know if that is something in progress that we will see when we talk a bit about forecasting our budgets year over year. And in general, I'm not sure, this is kind of like a double question, but I seem to recall, exploring whether or not a different reserve may be practical around being created. And I'm not sure, Mayor Lehman, you had some really great dialogue with county staff, and I didn't know if it was appropriate to kind of ask you to share that, because I think you were coming up with some creative, proactive ways in which we could explore how to address the pressures.
Marilyn?
And thanks for that, Councillor Congo. Yeah, specifically, I think the Housing Task Force is likely to recommend Barrie Council approach the county about a matching commitment towards supportive housing specifically. And, I'm conscious that the task force would make that recommendation in the midst of this discussion, where already the capital price tag is increasing very rapidly. But I think the specific area of concern is we've been told now for several years, that's the solution to homelessness, and also the source of a great deal of pressure on our police service, on our hospital, on our own emergency services, the intersecting crises of mental health, homelessness, and addictions made worse by COVID. And without the investment in supportive housing, we're struggling to even deal with the growth in demand for services. So long story short, I think that the thought I had in thinking about this, and of course, the task force is actually meeting tomorrow to discuss that as a draft recommendation that'll come forward to council in the coming weeks. But I think the point of that is to say, if we're going to be contributing this much in capital towards the broader human services agenda in the county, this might be a way to target it at what we need most in Barrie, which clearly is, 5 or 6 or 7 times as much supportive housing as we've got, because that's our moonshot to address chronic homelessness in a substantive way in the city and address the kind of thing we're seeing out on our streets at the moment. So, that's a way that maybe we could make that happen. I thought it should start with people who know that world best through the task force, making recommendations to us as council. And then if council agrees, we take that request to the county. But on the money side, it becomes a part of this broader discussion. And I think it's timely to have that now with the services agreement coming up.
Thank you for the comments, Mayor Lehman. Any other members who aren't on the committee? Councilor Reba, Councilor Alwyn? No comments on this? Okay, so I'll just read it again. It's on the floor as read, as printed, that the report to the Finance and Corporate Services Committee dated November 16th, 2021 concerning the County of Simcoe capital contributions be received for information purposes. Any other questions, comments? Seeing none. If you're in favor, please indicate. That is unanimous, none opposed. Thank you very much, members of committee. And we are at adjournment. This concludes the Finance and Corporate Services meeting at 7:54 p.m.